Every transaction we record has two sides, one debit and one credit. Over time, dozens or even hundreds of entries are posted into the ledger. But how do you make sure everything has been entered correctly? That's where the trial balance comes in. A trial balance is a list of all the balances in the general ledger at a particular date. It is one of the key checkpoints in bookkeeping, helping us confirm that our entries follow the double entry rules. The trial balance is generated to, first, provide an overview of all account balances. It shows the balance of every account, assets, liabilities, income, expenses, capital, and drawings, all in one place. Second, check mathematical accuracy. If total debits equal total credits, it suggests the arithmetic is correct. Third, help identify mistakes. If the totals do not agree, an error has likely occurred in the bookkeeping process. And fourth, prepare for financial statements. Businesses rely on an accurate trial balance to produce income statement, called profit and loss, and balance sheet, called statement of financial position. A trial balance acts like a bridge between the ledger and the financial statements. The trial balance is presented in two columns, debit and credit. The types of accounts generally follow predictable patterns. Debit balances usually include assets, things the business owns like cash, equipment, or inventory. Expenses, costs of running the business, such as rent or wages. Drawings, money taken out by the owner. And purchases, goods bought for resale. These accounts increase on the debit side, which is why their ending balances appear in the debit column. Credit balances usually include income, which is sales or service revenue. Liabilities, amounts the business owes, like loans or payables. Capital, this is the owner's investment in the business. These accounts increase on the credit side. Because these patterns stay consistent, it becomes easier to recognize whether a balance belongs on the debit or credit column of the trial balance. Here is the trial balance for reference. On a debit side, we have bank, £11,470. The bank balance is a current asset, and assets normally carry a debit balance. A positive bank balance represents money the business owns, so it appears on the debit side. If the bank were overdrawn, it would move to the credit side as a liability, but here it is clearly positive. Equipment is £8,000. Equipment is a non-current asset, something the business uses over a longer period. Like all assets, equipment increases with a debit, so its closing balance sits naturally on the debit side of the trial balance. Rent expense is £1,250. Rent is an expense. Expenses increase on the debit side because they reduce profit, and they always appear in the debit column when the trial balance is prepared. Wages expense is £3,600. Wages or salaries are also expenses. As with rent, this account increases through debits, so the closing balance shows on the debit side. Trade receivables is £480. Trade receivables represent money owed to the business by customers. This is a current asset because it is money expected to be received in the near future. Since assets hold debit balances, trade receivables appear on the debit side of the trial balance. Drawings is £2,000. Drawings reflect the owner withdrawing funds for personal use. They reduce capital, so they carry a debit balance, making debits the correct column for this account. Let's look at the credit side accounts. These include liabilities, income and capital. Trade payables is £4,500. Trade payables represent amounts the business owes to suppliers. Liabilities increase on the credit side, so any outstanding supplier balances appear here in the trial balance. Bank loan is £8,500. A bank loan is another liability, money the business must repay. Since liabilities carry credit balances, this shows on the credit side. Sales revenue is £10,600. Sales income increases the business's profit. Income accounts increase on the credit side, so the total sales for the period appear as a credit balance. Owner's capital is £3,200. Capital represents the owner's investment in the business. This amount increases equity and is always shown on the credit side in a trial balance. Both sides total £26,800, so the trial balance agrees. Before we can correct mistakes, we first need to understand the different types of errors that can occur in accounting records. First type of error is reversal of entries. This happens when the correct accounts are used, but the debit and credit are swapped. For an example, we bought equipment for £1,000. Correct entry should be debit equipment £1,000 and credit cash £1,000. But the wrong entry was posted as debit cash £1,000 and credit equipment £1,000. The accounts are correct, cash and equipment, but the sides are reversed. Why this matters? The trial balance still balances, which makes the error harder to detect. However, the financial statements are wrong because the accounts show the wrong direction of movement. We have to correct a reversal of entries error. The correction has two stages. Step 1. Remove or reverse the incorrect entry by simply doing the opposite. Debit equipment £1,000 and credit cash £1,000. This cancels out the mistake and returns both accounts to where they would have been if nothing had been posted. Step 2. Post the correct entry. Correct entry should be debit equipment £1,000 and credit cash £1,000. We do it in two steps because a reversal error means the original entry is backward, so we must undo what was done and record what should have been recorded. Removing the original mistake ensures the accounts reflect the true position. Second type of error is error of original entry. Error of original entry is when the wrong figure is recorded from the very beginning. An error of original entry happens when the correct accounts are used, but the amount itself is written incorrectly when the transaction is first entered in the books. This means the mistake starts at the source. For example, the invoice, receipt, or instruction was read incorrectly or mistyped. Once the wrong figure is entered, that same wrong figure gets posted throughout the accounting system. For an example, the business was meant to record £12,500, but the amount was mistakenly recorded as £1,250. The transaction is still between the correct accounts, but the value is wrong. Corrections follow a very logical process. Step 1. Reverse the incorrect entry. We post the opposite. Debit bank £1,250 and credit rent expenses £1,250. Step 2. Post the correct entry. Now enter the transaction with the right amount. Debit rent expenses £12,500 and credit bank £12,500. This two-step method clears the books of the incorrect figure entirely. It makes the correction transparent and easy to audit. Next type of error is error of principal. When a transaction is posted to the wrong type or class of account, an error of principal occurs. The amount is correct, but it is posted to the wrong type of account. This breaks accounting principles. The trial balance still balances, but the financial statements become misleading. For an example, the business pays £400 for office stationery, like pens and paper, but the bookkeeper accidentally posted it as if the business had bought a new office desk, which is a non-current asset. Wrong entry was made, debit office furniture £400, which is a wrong type of account. The amount is correct, £400 was paid, but it was posted to the wrong category of account. To correct this error, we will remove the incorrect entry and post the correct entry. Since bank is correct, we don't reverse the whole entry. We simply credit office furniture £400 and debit stationery expense £400. Bank remains untouched because it was correct. We fixed only what was posted incorrectly. Next type of error is error of commission. Error of commission is when the entry is posted to the correct type of account, but to the wrong specific account within that category. The amount is correct, the debit and credit direction is correct, but the bookkeeper chooses the wrong actual account. Simple example, the business pays £150 for cleaning supplies. Correct expense account is cleaning expense, but the bookkeeper accidentally posts it to postage expense. Wrong entry made, debit postage expense £150, credit bank £150. Bank entry is correct. The only problem is the wrong expense account was used. We don't need to reverse the whole entry. We only fix the wrong expense account, credit postage expense and debit cleaning expense. Next type of error is error of omission. Error of omission is when a transaction is completely left out of the accounting records. Nothing is entered in any ledger. Because both debit and credit are missing, the trial balance still balances, making the error harder to detect. For an example, sales invoice omitted. A sales invoice is issued to a customer, ABC Limited. Net amount is £1,000, VAT £200, total is £1,200. Correct entry should have been debit trade receivables £1,200, credit sales £1,000, and credit VAT output £200. But the invoice was never entered in the accounts. This means ABC Limited shows no amount owed, sales are understated, VAT return is incorrect, profit is understated. How to correct an error of omission? Since nothing was entered, there is nothing to reverse. We simply need to post the correct entry in full, as if doing it for the first time. Debit trade receivables, £1,200, credit sales £1,000, credit VAT output £200. Another type of error is compensating error. A compensating error occurs when two separate errors happen in the accounts, but they offset each other, so the trial balance still balances. Individually, each error is wrong, but because one error increases or decreases the total on one side and another error increases or decreases the total on the opposite side by the same amount, the trial balance appears correct, even though the underlying accounts are not. These errors mask each other and make the books look right when they are not. Let's look at two unrelated errors. Error 1. Electricity expense was supposed to be £300, but the bookkeeper posted £200. The debit side is understated by £100. Error 2. Sales revenue was supposed to be £5,000, but only £4,900 was recorded. The credit side is understated by £100. Result of these, debit is £100 too low and credit is £100 too low. They cancel each other. Trial balance still agrees. To correct the understated electricity expense and sales, we debit electricity expense £100 and credit sales £100. Let's summarise the 6 types of errors that do not affect the trial balance. Even though these errors are all different, they have one important thing in common. The debits and credits still add up to the same total, which means the trial balance will still balance, even though the accounts are wrong. Error of omission. The whole transaction is simply missing. Nothing was posted at all. Error of commission. The right type of account was used, but the wrong specific account, such as choosing the wrong expense account. Error of principle. The transaction went to the wrong category of account, for example, treating an expense as an asset. Error of original entry. The correct accounts were used, but with the wrong amount. Reversal of entries. The accounts are correct, but the debit and credit have been posted on the wrong sides. Compensating errors. Two completely separate errors happen, but they cancel each other out, so the trial balance still balances. These are the key errors that don't impact the trial balance, which is why we can't rely on a balanced trial balance to mean everything is correct. A trial balance can agree, but the accounts may still contain mistakes. There are a few types of errors that affect the trial balance. These are older, manual bookkeeping errors. Modern systems normally prevent them, but you still need to recognize them because they explain why a suspense account may appear. A suspense account is used temporarily when the trial balance doesn't balance, holding the difference until the errors are found and corrected.